the cushioning and resilience of South Africa, primarily because of this one factor, that we have low levels of foreign debt and we don't have the problems of a peg currency, and therefore our liabilities will not automatically, when the peg breaks, go out of kilter. That means we have a significant cushion. And this is to the first question about the financial crisis question, are we going into financial crisis? Well, hopefully it tells you we're not about to go into financial crisis. The probability is low. We have a very significant cushion for these reasons. One, we have this deep financial market, particularly the asset management community, which can absorb foreign selling pressures. Second, South Africa has attracted about 40% of the shareholders of the JSE Top 40 are foreign shareholders on average. And the reason is that relative to Russia, which is uninvestable for many investors, Turkey, which has its own difficulties, Brazil, which is in deep recession, South Africa's corporates, which are very well governed, highly resilient in terms of earnings performance. You know, you haven't seen cracks, for example, notwithstanding low growth in the bank's non-performing loans. You continue to see growth being driven in consumer retail companies, in telecommunication companies, in industrial companies. Obviously, the mining sector is under particular stress, but generally speaking, they have a liquid base of well-run and resilient companies in which to invest. Second issue, we have this low level of dollar-denominated debt, and we have very well-respected institutions. This is very important in the SARB and the National Treasury. The reason is when people look at other countries, which I won't name in public, but other countries don't have the same sense of credibility of their independence of their monetary and fiscal authorities. So the fact is when the SARB increased interest rates, there's no question about whether the governor and the MPC had all consulted the government. They do it independently, they have a high credibility, they take what they believe is in their best interest in the mandate of the SARB. The flexible exchange rate is very important because the revenues of South African companies are majority diversified offshore, in fact, on the top 40. Actually, our asset side appreciates when the currency depreciates. And so the balance sheet of South Africa, ironically, is strengthened by the depreciation of the rand. Does that make sense? So you have offshore earnings, offshore dividends suddenly become more valuable. On the negative side, the current account obviously is a concern, particularly at this time of Fed interest rate imminent hiking, because it creates the possibility of lower portfolio flows and a shock to the portfolio flows, which will run through as well into our ability to fund the current account deficit. And the second area of concern is the state-owned enterprise borrowing program. So to the extent that effectively the domestic financial sector is unable to create sufficient credit capacity to take on more debt from the state-owned enterprises, means that they will be forced for more offshore borrowing, which will raise the stock of offshore debt, which creates systemic impacts. And I think the National Treasury is extremely alive to this problem. So it's a warning sign, but it's not something at this point in time that is of great concern. The last area, unemployment, is a problem because of the absolute numbers, but it's also a problem because if you ask yourselves, why does South Africa not generate countervailing for unemployment, significant smaller micro enterprises in the economy? It's because the rigidities in our economy with highly dominated sectors. You think any sector you like, there are 3 or 4 large players. Now, there are many business people that would say, hang on, we, Investec, Discovery, et cetera, have started at times where there have been very large dominant players, and today they are big players. But I think the truth is the rate of success of smaller micro enterprises is limited by the relative concentration of South Africa's economy. So I hope they've clarified in respect of financial crisis the various issues. The question, of course, arises, is a 1.5% or 1.2% to 1.4% trend growth rate sustainable in South Africa? And the answer is absolutely not. We cannot have the cocktail of low growth, high unemployment, rising interest rates is a very dangerous combination in this country, and we have to therefore up the growth rates. And the question is, can South Africa return to 3.2% average GDP growth rates?